Some choices are simple. Let's say I were to give you two options for your hard-earned savings and investments. Option 1 is to lose some of your interest or profit to the taxman, and option 2 is that you don't have to. I know which option I'd choose. Well, in fact, if you're a UK resident, you do have exactly that choice. And in today's video, we are going to be looking at how you do that with individual savings accounts. By the end of this short video, here's what you'll know. What is an ISA? What taxes can you save? How it works? The different types of ISAs available. An introduction to the Trading 212 Stocks and Shares ISA. How much you can put in an ISA, the ISA Allowance. Withdrawals. Transferring ISAs, and Trading 212's brand new ISA offer. Hello everyone, my name is Tom Morgan from the YouTube channel That Finance Show. I'm a qualified financial advisor, would you believe, based here in the UK, and this video is in collaboration with the good people from Trading 212 who want to help you get smarter when it comes to investing. Remember, all details, facts and figures are accurate at time of filming and are subject to change, so be sure to double check before you take action for yourself, and nothing in this video is financial advice. Now, ISA stands for a lot of things. Some of my personal favourites include the Iowa Soybean Association and the Indian Squash Academy. Yep, they're real. But for the purpose of this video, Trading 212 wanted me to concentrate on the individual savings account. I know, boring, right? I had loads of good soybean material ready. An ISA is a tax-free savings or investment account for UK residents that allows you to put your ISA allowance to work and maximise the potential returns you make on your money by shielding it from income tax, tax on dividends and capital gains tax. You may hear of them referred to as tax wrappers. Think of them like a force field sitting around your money, keeping the taxman away. So you can save tax by using them, but so what? Well, let's take a very brief look at those taxes to see what they would equate to if you didn't use an ISA, so you know what you're protecting yourself from. On interest you earn on cash savings, if you're a basic rate taxpayer, you'll get the first £1,000 tax-free and then pay 20% on anything above this. Higher rate taxpayers will get £500 in interest tax-free and then pay 40% on anything over that. And finally, additional rate taxpayers get no tax-free allowance at all and pay 45% tax on the lot. Ouch. Now, tax on investments are a little different. Firstly, there is capital gains tax. This is a tax payable on profit made on an asset when you come to sell it. Currently, you get the first £12,300 of profit tax-free and then pay tax on amounts over this. But this is changing drastically as of April 2023. For the 23-24 tax year, this allowance is being slashed down to £6,000. And then even worse, the following tax year, it's coming right down to just £3,000. This means a lot more people are going to be paying capital gains tax. The rates range from 10% up to 28%, and it depends on what taxpayer you are, basic or higher, etc. And what the asset is as well makes a difference. For example, a different rate is used for property. Some stocks and shares pay out dividends to investors, which is a type of income you receive, and yes, that is taxed too. You'll get the first £2,000 for free, and then pay between 8.75% to 39.35% on the rest, depending on what income tax band you sit in. So as you can see, there's not a lot that the government don't tax, but an ISA is a great and easy way to avoid all of that, which keeps more in your pocket. They are so simple too. You don't have to declare them on a tax return or report them in any way. Here are the different types of ISA accounts. Cash ISAs for saving cash, stocks and shares ISAs for investing in the stock market, innovative finance ISAs for peer-to-peer lending, and lifetime ISAs for saving to buy your first home or for later life. For a cash ISA, you have to be over the age of 16. Stocks and shares and innovative finance ISAs over the age of 18. And to open a new lifetime ISA, you'll have to be over 18 but under the age of 40. There is in fact now also a fifth type of ISA called a junior ISA, which replaced what was the Child Trust Fund for your dependents under the age of 18. To open a junior ISA, you'll need to be the parent or legal guardian if your child is under 16. If they're 16 or over, the child can open one themselves. These can also be cash junior ISAs or stocks and shares junior ISAs. Word of warning with junior ISAs, be aware that they get control over the account when they are 16 and can start withdrawing from it when they're 18, which, thinking of what I was like when I was 18, might be a scary thought. When it comes to trading 212, we are specifically talking about a normal stocks and shares ISA for investing in the stock market, and that's what we will be mainly focusing on in this video. In a stocks and shares ISA, generally, you would have the following investment options: funds, shares, investment trusts, exchange-traded funds, government bonds, gilts, and corporate bonds. So all of these options you see here on the Trading 212 app are available in your ISA, and you can also hold a bit of cash in your stocks and shares ISA too if you like. Any investments you hold inside this ISA account will not be subject to the income tax, tax on any dividends you receive, or capital gains tax on any profits when you sell up. Now, this all sounds great, so why don't we just put everything inside an ISA? Well, there's an allowance, and although this can be fairly simple, it can take a bit of explaining if you're using more than one type of ISA, so let me have a go. You can choose to save in a variety of ISAs as long as you don't exceed the annual ISA allowance for the tax year that you are in, currently £20,000 at time of filming. A lifetime ISA has a reduced allowance of just £4,000 per year, and a junior ISA is different too, as the allowance is £9,000 a year for these. These allowances run in line with the UK tax year, which is from the 6th of April to the 5th of April. Let me show you how you can use that allowance. You can use your ISA allowance in full with either a cash ISA or an investment ISA, or an innovative finance ISA, paying in up to £20,000 in the current tax year. Alternatively, you can split your ISA allowance using it as you wish across the 4 different types of ISA, subject to the individual account limits, as long as you don't pay in more than £20,000 across them all, and no more than £4,000 into the lifetime ISA. You can only pay into one of each type of ISA in each tax year, and a junior ISA is separate, as that is technically in the name of the dependent you are opening it for. Confused? I know, it's easy to get lost in this bit. Let me show you another way. Here's the 4 main accounts, and here is the tax year we are in now, 2022-23. And here is the next tax year coming, 2023-24. This year, if you wanted to use a lifetime ISA, you can put £4,000 in there. You can then spread the remaining £16,000 of your allowance across any of the others in whatever proportion you want. If you didn't want to use a lifetime ISA, you can simply put in £20,000 in any one of the other 3, or a combination if you like, as long as you don't exceed the total £20,000 allowance. Let's say you get fed up of your cash ISA provider for whatever reason. You cannot contribute to a new one in the same tax year, but once you are in the next tax year, you can, no problem. So you could have lots of different ISAs of the same type in theory, as long as they were paid into in different tax years. Oh yeah, and then here's the separate junior ISA here. £9,000 in here, remember, and this is separate to all this other stuff. Right, let's talk about withdrawals. Although investing is for the long term, you can withdraw money when you need to from the Trading 212 Stocks and Shares ISA, although don't forget the value of investments fluctuates, so you may be up or down at the time of withdrawal. And it's not immediate to get your money either, as your investments need to be sold and money transferred back to you. With whatever ISA you take out, be sure to check the withdrawal rules before you open the account, so you know how these work. With Trading 212, your ISA is a non-flexible ISA, and what this means is any replaced withdrawals will count as a subscription for the tax year in which it is subscribed. So imagine you have deposited £10,000 and you decide to withdraw £1,000 later on. The balance in your ISA might be £9,000, but your current tax year subscriptions will remain at £10,000. And if you decide to put more money in later, this will be added on top of your original £10,000, not the new £9,000 value. Right, next is transferring. You can transfer your ISA from one provider to another at any time, and you can transfer your money to a different type of ISA or to the same type of ISA. If you want to transfer money you've invested in an ISA during the current year, you must transfer all of it. With the Trading 212 Stocks and Shares ISA, you can move as much of your ISA contributions from previous tax years as you like. However, if you wish to transfer the money you already put into your ISA this tax year, you'll need to transfer all of this year's pot together. Generally speaking, transfers take around 30 days, but this does vary depending on what providers are involved. To instruct a transfer, you go to your new desired provider and follow their process to request it for you. At Trading 212, you fill out this ISA Transfer Authority form and they will contact your previous provider to start the process. So, hot off the press, if you sign up with Trading 212 and open an ISA before the end of April 2023, you will get 1% cashback on any ISA deposits you make for the next tax year. Just remember, when investing, your capital is at risk, and like any offer, terms and conditions apply. We'll leave a link in the description with all the info you need on this amazing offer. I hope this video has helped you understand ISAs and how they work. They really are an amazing wealth building tool, so I'd give some serious thought to using them to your advantage. Give the video a like if you learned something or got the answers at least that you were hoping for. And subscribe now to the Trading 212 channel with notifications turned on so you don't miss any future videos. Hey, if you're feeling really kind and you're enjoying the Trading 212 app already, please consider leaving a 5-star review on the App Store or Google Play to let others know just how good it is. Until next time, my name is Tom Morgan from That Finance Show. Thanks as always for watching.